HIMS House, episode 21. I'm Jonathan Stern. I'm here with Lewis Stevens and Dr. H. The stock's at 45.5. We're up 5% after CPI came in hot, which is fascinating to say the least. Short interest is at 33%. Still another increase. To kick things off, let's start with the Super Bowl ad. What did we think about the fallout?
Well, I think there's lots of perspectives from positive to negative to neutral. And I guess kind of to be expected with, how it kind of paints a picture of the current status of the healthcare system. And you just have a lot of perspectives. And who was it that said, there isn't any attention that's negative? Any kind of attention is positive. Was there a famous person said that?
Well, it's just the common refrain that there's no such thing as bad news, or all news is good news, however you want to put it.
Yeah, I mean, I feel like that's basically what's happening here. Like, for someone who didn't know about HIMS, and if they see a negative headline, they may actually just go and watch it. Maybe they have an open mind and they're like, "What's this? All this talk about this bad ad or whatever," and they're like, "Oh, this actually resonates with me." So there's potential for it to even sway people who had no interest in knowing about HIMS, and all of a sudden they're like looking at it.
I mean, we were talking about it on the Discord. We were all sort of blown away by the degree to which the ad had been picked up as national news by all of the big outlets. New York Times, The Atlantic, CNBC did something on the ad. I think NBC may have as well. Like, by the time Wall Street Journal ran several articles about it. By the time the ad aired, I think pretty much every major outlet had written something about the controversy. And then the day after, Novo comes out with their what was the quote from Novo, Dr. H?
It was check before you inject.
That's right.
Which sounds like something my 6-year-old would have come up with.
What did you think about that?
I think they're feeling some pressure with all the attention, and maybe they're trying to capitalize on and pushing back on it too. So, this ad from HIMS struck a nerve for sure. And how does it resonate with a normal customer, a normal person, sitting and watching TV and thinking about their health? I think that's what's going to be most important over the next, this quarter into the next is, does this ad effectively bring attention to HIMS and cause people to explore it as a viable healthcare option? I think it may have done its job. It was a very raw message that was full of emotion, and it kind of hits at a pain point for people when they're dealing with their health and their access to care and things like that.
Another outcome of the ad, and we were tracking the Google trends pretty much in real time at like 9:30, 10 p.m. Eastern time. When the ad aired, it was just to the moon, completely off the charts. But then the next day, we looked at the Apple App Store rankings. And for the first time since we've been tracking the data, the HERS app eclipsed HIMS. HERS was in second place in the medical category. HIMS was in fourth place, both all-time high. It was all-time highs for both apps. But HERS had actually inched ahead of HIMS, which was fascinating. And as you've been saying, Lewis, for really 3 or 4 years now, sort of exactly where we expected the trajectory there to go.
Yeah, I have been extremely excited for that. We've talked about it in the past in this podcast through the lens of the different psychologies between men and women and how they spend money. But in 2021, when HIMS and HERS Health, the company, began discussing HERS, at the time it was just a website, and they were promising that an app would be launched in the near future in 2021. I speculated that HERS would ultimately eclipse the HIMS brand eventually. And, it's taken a few years, but we finally reached that point where it looks like HERS could eclipse HIMS in terms of size. If I remember correctly, HERS is at about 400 to 500,000 subscribers out of 2 million. So there's still work to be done there. But it's promising that the HERS app is now ahead of the HIMS app. And I think that, the HIMS brand it's sort of like a Google in the sense that it's kind of a nonsensical word that has been gaining traction as like a now, a word in the dictionary in the United States. I don't know, we're obviously not at Google levels of being in the minds of people, but I think, we could get there. But I think the HERS brand is just really compelling. Like HERS Health is a very compelling alliteration. The brand's doing very well now. And the reality is that women spend more money shopping and on beauty and healthcare than men do. So I think it's very promising. And it adds another leg to the growth. A huge component of the bear's thesis for HIMS is that growth could slow at 3 million subscribers. They've been thinking that it would slow well below that, at maybe 2 million where we are now. But hers is, it's essentially another product on the product roadmap that extends growth.
I think we've seen HIMS kind of pushing the HERS side more too. Like if you looked at the commercial, I think at the end the logo, it said HIMS and HERS. In the past, a lot of the commercials were just said HIMS. On the radio, on typical radio spots, it's interesting, their GLP ads are specifically a HERS branded and they don't mention anything about HIMS.
And I was interested in that too, Dr. H. So I think when HIMS initially shared the ad, or when the ad was posted on the Wall Street Journal, which is where we saw it first, I think it was the HERS YouTube channel that shared it first. We'd have to go back and check the dates that they were posted or the times, because I think they were posted to each HIMS and HERS on the same day. But I saw that HERS, light blue logo way more around the Super Bowl ad than I did HIMS, the HIMS YouTube channel.
Yeah, the video I saw with the commercial at the end, it was HIMS and HERS. It was not HIMS by itself or HERS by itself. So it's really neat to see that they're actually now really trying to bring more attention to the HERS side of it. And it kind of goes along with our thesis of, HERS being this the side of things where it could eclipse the HIMS side. We're seeing on the HERS website, they're starting to gather potential customers by doing the top level funneling and accumulating or giving out guides on balancing your hormones. I think we saw that on the website today. They're subscribe to this newsletter and we'll give you information about your hormones and stuff. So it's really the first step of acquiring and treating these patients eventually when they do roll out the menopausal and hormonal care.
Just in terms of how large we think HERS can become, or will become, at least with earnings coming up in less than 2 weeks. As you said, Lewis, we were at 400,000 subscribers end of Q3 2024, which is close to 20% of the total subscriber base. Any projections for where we might be end of full year 2024 when the numbers are unveiled in 12 days?
I mean, it would be total speculation. I don't really have a great answer to that, but I just think it's going to help extend growth runway, and that's a huge component of the valuation. That's a huge component of ultimately where the stock will trade in the near term. So the HERS brand is definitely worth paying attention to. It's worth tracking, and that's what we just have to keep tracking it.
Aside from the negative attention from the legacy media companies, New York Times, I think was the one that said the commercial, they ranked it the worst out of all the Super Bowl ads. When I just hopped on to social media of actual non-legacy accounts, I see accounts from physician influencers and people online. There's a very popular specialist, a physician who, her name is Kelly Casperson. She does a lot of women's health, menopausal care, stuff like that. She actually had a post on Instagram that was very positive of the HIMS ad. And so it makes me think that who's speaking the loudest? Is it the people who have other interests in seeing HIMS not succeed? Are they the loudest? Possibly. This Dr. Casperson said, who's the most pissed off? It's the status quo people, the status quo physicians, status quo healthcare people. And she basically says they just don't see the revolution coming, and alludes to HIMS being this part of new wave of HIMS and HERS, this new wave of healthcare that really can attract and bring people into the platform and provide care that was not accessible before.
Could you see my screen when I was sharing that?
Yeah.
We did.
Okay, great. Well, moving then to sort of the news today for the entire financial market. CPI came in hotter than all of the analysts were expecting. Rates are up, which typically is bad news for growth stocks, and yet HIMS powers on. As I said at the outset, we're at $45.50 a share, so closing in on yet another all-time high. Lewis, could you offer an analysis of what the CPI print means for the financial markets at large, and then what it could mean for him specifically?
Sure. So a higher CPI implies that the economy is overheating, quote unquote, and the way that the Fed handles an overheating economy is via higher interest rates and control of the money supply. So higher inflation equals higher interest rates, which equals a higher next best alternative, quote unquote. And that ultimately pulls down on equity values. So higher rates, lower stock valuations. And I'll apply it to HIMS here in a second. But I thought, I think it's interesting that it's clear that inflation is picking back up. Like the CPI print was very hot, but stocks continue to rip. It's not just HIMS. There's a lot of momentum stocks that continue to rip, including, for instance, Palantir. And I just think generally when I saw it, I'm like, what's the pain trade here? What's the obvious thing? And then what's ultimately the pain trade? What's going to cause market participants the most pain, the majority of market participants? And that would be for stocks to rip on what's obviously data that should indicate that stocks will decline. There's a few different perspectives. You could argue that higher inflation equals faster growth in profits. And if the Fed's not raising rates, then party on. So we've seen stocks rip as a result of in light of the hot inflation print, which caused higher rates. As it relates to HIMS, you would expect with a higher next best alternative, higher interest rates, the stock would decline. But in a lot of ways, HIMS has been a powder keg in the sense that the pain trade is for the stock to go up, because the consensus trade for HIMS has been, as evidenced by the short interest, for the stock to go down. So I think, especially if the company continues to execute and the fundamentals remain as strong as they have been, with seven of the last 7 quarters generating free cash flow, really good execution on its product roadmap, I think the pain trade will continue to be up, even with interest rates rising.
I want to ask about 2 things. Number one, eggs. What's going on with the eggs? $12 for 12 eggs. A friend here in New York just said maybe those are New York prices, but also I hear that eggs are unreasonably priced everywhere. And then there's this real-time inflation tracker called Truflation, which many people took an interest in a few years ago, which is supposed to be a gauge of where inflation is today. And of course, the Fed is a little bit on lag, and so this sort of catches us up to speed sooner than the Fed. Truflation has us at 2.07%. And if you look at the chart, we've pretty much fallen off a cliff over the last month and a half, really since mid-December. So, first of all, to what degree are the eggs influencing the number? And then do you put any stock in the Truflation data, which shows that things are improving pretty quickly, and maybe this CPI print's an anomaly? Where do you come down on all that?
Well, I've continued to think eggs are a cheap, great source of protein. I haven't noticed, but I don't know. Maybe I'm just lucky enough to not even notice egg prices. I have not. I mean, I'm buying 24 eggs at a time, and I think I'm getting a great deal consistently.
I think
eggs.
I think we're dealing with a big, almost pandemic with this new avian influenza strain H5N1, and they've had to put down a lot of chickens, and I think that's one of the main causes of the increased cost of eggs, basically.
I think it's objectively the case that the price of eggs is out of control.
I've been seeing the egg thing, but I just thought it was a political talking point.
It was a big political talking point before the election, and it remains a talking point after the election.
I've just heard a few things about the eggs, so I thought I'd ask.
What?
I don't know to what degree that affects CPI. I can't imagine it affects it too much, but like they have all of these inputs. Some of them affect the final number more than others. So
yeah, I think doesn't the CPI track consumer goods? Like they take a basket of goods and they compare it over time, and there's other things too, like rental prices of stores and offices and things like that.
Yes, and there's shelter and other things. And interesting tweet from Data Driven Investing this morning that says many of those rental prices are based on surveys rather than actual economic hard data. I need to dig into that a little bit more to understand it, but like not clear where those numbers are coming from exactly.
So if that's true, that would basically give a critique of the CPI in its accuracy of, representation of the true state of inflation, basically, right?
Correct. But I think it's widely accepted as the best that we have. So, even if it's imperfect, it's capturing a trend, if nothing else. Lewis, are you familiar with Truflation, though?
I am very familiar. And with all due respect to the creators, I think, obviously it's a really cool product. I think what they're doing is very interesting. I think the creator is a brilliant guy. I really do. I've researched him. I think he's just unorthodox. He's just a really interesting, smart guy. But I have long written off Truflation through the lens of informing what will happen at the Fed. And, I've mentioned the next best alternative, quote unquote. We've done podcasts in which I've discussed that idea, the next best alternative. But the next best alternative is nested in within 4 points of stock value. The first is how much free cash flow per share HIMS. I'll make this applicable to HIMS specifically. How much free cash flow per share a business generates, how fast that is growing, how durable it is, and then what our next best alternative is, right? So the first 3 points are the nature of the business. In the case of HIMS, it's growing rapidly. To answer the second point, for instance, the HERS brand illustrates that there's likely a very long runway for growth. I mean, only 400,000 women out of, roughly 160 million, or take out children, 130 million. Only 400,000 women are subscribed. So I would argue that there's quite a long runway for growth. And then what's the durability? And, the durability is informed by the stickiness of the products, and a handful of HIMS products are for life products. I think we could do a whole analysis of the HERS products, but then what's the next best alternative? So the first 3 are what's going on with the business. And the fourth is what's this next best alternative? What's the discount rate in the economy? What's the cost of credit? What can you get outside of stocks? What's your next best alternative? And that is really, that's informed to a very large degree, if not totally, by the rate at which inflation is occurring. And as inflation goes up, interest rates have to rise, and that's creating the percentage of next best alternative, that's creating the next best alternative and the level at which it's trading. And, that pulls up and down on HIMS's valuation. But Truflation, I've frankly written it off. It has not really accurately, it's not done what it's promised to do. It has given a general trend, and that has been helpful. But at no point over the last 3 years has it aligned with the Fed's, Bureau of Labor Statistics data that publishes the CPI report. So I think it's interesting. I think it's novel. I personally believe that the Fed's doing a bad job. Truflation's really not doing a great job either. I think that there should be 300 million data points, and it should be all governed by AI, in the same way that I think all of HIM's SKUs should be almost entirely governed by AI. But, with the current administration and the techno empire they're trying to build behind the scenes with AI and everything, maybe the Fed, is able to better track inflation over time via AI and expansion of the data points.
Yeah, I do think it'll be interesting to see whether we get any innovation in how we're reporting on these numbers in the next 3 or 4 years with the new tech focus. Moving to the final topic of the day, short interest was released yesterday. Short interest as of January 31st. We hit a new record, 58.2 million shares are short HIMS, 33% of the float. Those numbers are contradictory depending on where you look, but it's, for all intents and purposes, a third of the stock, a third of the shares are short. We talked about this before, but what the heck is going on here? And it's February 12th now, and we've rallied a bit since January 31st. But are we squeezing? Do we think a bigger squeeze is still to come? Anything else to add from the conversation that we had before?
Well, if you've not heard that conversation, I'm not going to reiterate the unique ideas.
The YouTube comments were very, very positive on that conversation, Lewis.
Well, I'm just not going to get into the whole Matrix is attacking HIMS conversation and but though that's the objective assessment of reality. That's what's happening.
Yeah.
And it's happened to every great company. That doesn't mean HIMS is going to make it through the gauntlet. There's no guarantees about that, but that, I genuinely believe that it is totally positive that HIMS is being shorted to the extent it is. Like we said in the last podcast, if it weren't, then we could be finding ourselves in an FTX scenario. FTX was not shorted, quote unquote, because it wasn't public. So I think it's net positive that it's being shorted this aggressively. And I don't think anybody should view short interest as an indication as to whether the business is going to perform well or not. I think their own objective assessment should be the North Star. I think short interest is totally meaningless. And the novel thing I'll say today is that I'll tie us back to what I introduced with, and where's the stock going to go? Where, through the lens of market psychology, where is a stock going to trade? Oftentimes in the near term, the stock is going to trade in the direction that causes the most amount of people pain. It's the pain trade. If everybody thinks that Google had fantastic earnings and that they're going to have fantastic earnings, they pile into the stock. Once they release the earnings, in all likelihood the stock's going to fall. It's a very common occurrence, and there's obviously nuance to that, and we'd have to look at the numbers, and there's a whole constellation of factors, but it's a very common occurrence that the market goes against the consensus, and that's called the pain trade. And in the case of HIMS right now, it has massive short interest. It's like long tail level short interest. It's rare that a stock experiences, especially a stock that has generated free cash flow in 7 out of its last 7 quarters, 8 out of its last 9. It's growing over 50%. It's demonstrated a durable book of business. Its sales and marketing's at the lowest point it's ever been as a percentage of revenue.
Credit card data for Q1 over 100% year-on-year growth.
If you want even better data, more nuanced data, subscribe to the Discord, subscribe to our data tracker. So, in my estimation, it's like, have the shorts been covering? I don't know. All I know is it's the most consensus. It's wildly consensus to be short HIMS. Like the way that they've gotten to this level of short interest is through hedge funds and mostly hedge funds.
Who is short? Who comprises the 58.2 million shares? Is it hedge funds?
It's likely, yeah. I mean, it's going to be big money.
It's not retail, right?
Yes, it's not.
Is it meaningful? There's that graph that we shared this week on X that institutions are increasing their shares owned of HIMS. Is that meaningful in any way? Does that balance out all the short interest, or what does that mean in the context of this?
No, I don't think it balances it out. I think that,
right.
I mean,
just to summarize the chart that Dr. H was talking about, institutional ownership spiked. Yet, I mean, it's been increasing linearly for close to 3 years now, but it spiked again, and we're now in a place where institutions own 170 million of the shares. That's close to 75% of total ownership of HIMS, leaving 25%. And then I think like Dudum is not part of the institutions. Jack Abraham is not part of the institution. The founders are not included in that, right, Lewis?
I'm not sure what the composition of
meaning that like retail owns probably close to 15% of the stock.
Yeah, I haven't given it. As I've shared in the past on this podcast, I don't mean to extinguish the conversation, but as I've shared, I am a genuine value investor. Like I look at how much free cash flow per share the business. I look at the 4 points of stock value, and then I like go to sleep. Like and to our listeners, all of this is interesting. There are interesting market dynamics, but to make money in a stock, none of it is totally necessary. It's the 4 points of stock value are the North Star. And for HIMS, they're all, every point is firing on all cylinders currently.
I agree with that. I mean, the stock could go up if it was owned 100% by retail or 100%
exactly,
or 100% by institutions.
But
over the long run, it's meaningless who owns the company as long as it continues to perform.
But what I'll say is it is positive that institutions are getting involved. Institutions managing tens of billions or trillions of dollars will understand the 4 points of equity value. It's quite straightforward, and they're getting paid 7 figures a year to understand what's ultimately something that's very simple. And I think it just represents, if you look at the company's free cash flow per share, you look at the growth, you look at the durability, 7 out of the last 7 quarters, 8 out of the last 9. I keep saying that, but it's important in terms of answering how durable is the cash flow. If they're consistent, where are we going to be at 14 quarters? Then there's going to be real durability demonstrated, even more than what we've seen. But institutions, they're smart people. And it's not, what we're doing isn't totally rocket science. So they're seeing the fact that HIMS is satisfying the 4 points of stock value in a really profound way, or the first 3. And they're buying the stock. As free cash flow per share ascends, the big money starts showing up. And, we say on the X account from time to time, HIMS House X account, stocks always follow free cash flow per share over time. And institutions follow free cash flow per share over time. And, they are the demand that's pushing these stocks up. It's, it's rarely going to be retail, and the founders are just going to be net sellers throughout the life cycle of the company. So it's super positive, and it just represents everything that we've talked about in this podcast, from the medical perspective to the financial perspective.
Yeah, at minimum, I wouldn't expect the coming months to be boring or actionless for HIMS, the stock, or the company. There's FDA news still to come. We have earnings in 12 days. And as always, we will be here every step of the way. We got to cut it short this time, but earnings are coming up, and we'll be back at it soon. So this has been HIMS House episode 21. If you haven't, please join the Discord, click the like button, subscribe to our YouTube channel, and all the rest. Thank you so much for joining us. See you soon.